Every year in the United States, about 20 people die per day waiting for an organ transplant. Not because there aren't enough donors, but because of how we transport organs. We put them on ice like groceries, and for decades, that was just accepted. It was the only way. Now imagine you're a heart surgeon and it's late, 2 a.m. You have a window of maybe 4 hours to get a donor's heart across the country into a chest and beating again. And if anything goes wrong, the logistics break down, the organ goes in the bin and the person waiting for the transplant might die. That was the reality for decades, until one surgeon decided to fix it. Today, Joep and I are talking about TransMedics, ticker TMDX, and the question of whether they've built one of the most unusual businesses in the stock market today, or whether the whole thing is more fragile than it looks. Let's dive in. Well, first of all, welcome Joep once again.
Thank you very much.
In our previous podcast episode, you actually pitched this company, and that intrigued me so much that we decided to do a full deep dive on the company. So Thank you for taking the time to jump on and discuss TransMedics.
Yeah, thank you for having me.
Absolutely. So TransMedics, I'll tell you right now, Joep, when I started the company, analyzing the company, I was like, okay, so they sell machines and they do a little bit here and there, and what they offer is unique. But man, going deeper and deeper into the company, I felt very stupid along the way. So many difficult words and jargon, and what they do is very difficult.
Yeah, it is. And it's not only what they do, but it's like the machine itself, like understanding how it works, what the benefits are. You really have to be like almost like a medical student to understand this. Like, while I was researching the company myself, I also had to explain my medical studying girlfriend about some of the terms. And she was like, why do you even need to know this? I'm like, don't worry about it.
Do you think it's mandatory for someone to really know a lot about the industry and the company, or is this a company you can just rely on management and own it?
I think you definitely need to know what they're selling, and especially, I don't know if we'll touch upon it in today's deep dive, but especially when there's a lot of misinformation coming from an activist side as well. Like, you need to know, okay, so what claims are true, what claims are false, and especially, as we're going to talk about later as well, like, you need to understand the mode. And to understand the mode, it comes back to the first point, you need to understand what they're selling. I don't think you need to know the ins and outs of how organs work, but I think understanding the basics is a first thing.
Yeah. And understanding the basics, let me take you through some of the company background, because I think for this company it matters. And then we'll get into the business model where you will take us through how they make their money. But it's a founder-led company. It's already pretty old, actually. It's founded in 1998. I wouldn't have thought that before analyzing the company, just because of how complex, and I haven't heard of the company before. And it was founded by Walid Hassanain. I'm sorry for the pronunciation, but he was an Egyptian cardiac surgeon. I think that's how you say it. But he was frustrated with how primitive organ preservation was. Ischemia, which is a difficult word for tissue damage from oxygen deprivation, basically destroyed and killed many organs before they were ever used. And like I said before, they still use, but they used to have cold storage, which helps. It slows the cell death pretty good, but it doesn't stop it. And a heart on ice maybe has 4 hours max. So it wasn't the best way. And if you need to go from A to B and it's more than 4 hours, you basically had no way to transfer the organs on long distances. So Hassanein wanted to keep the organ alive outside the body and not just slow its death on ice. And after 2 decades of spending millions on R&D and clinical trials before any meaningful revenue, they managed to build something with TransMedics. In 2018, they got the FDA approval for their lung device. In 2021, they got FDA approval for their heart and liver devices. You don't get approval very easily, so they are definitely doing something right there. And they IPO'd in 2019. It's been all over the place. It went very high. It declined over 40% over a 3-year period. It's been all over the place. And then in January 2025, and maybe Joep can touch on this a little bit, a short seller report came out from Scorpion Capital. 342 pages of basically bad news for TransMedics. Walk like an Egyptian. What was that all about?
Well, this short report was very aggressive. The language that they used was proposing that the company was one big scam. It wasn't doing anything right. It was making money. It was making very high costs. Just under the flag of, Medicare will take care of it. The insurance system in the United States, because it's organ transplantation, it's vital. Like, they don't really care how much it costs. So we just integrate all these high value chain costs, and Medicare will just pay it. That was basically one of the. I mean, there were many arguments of the short seller, but by just reading through a couple of pages, you would already see that the seller was just trying to bring the stock down, like, very, very aggressively. That's what short sellers do, obviously. But some of the arguments also didn't really make sense, in my opinion. I think one that stood out for me is that the short seller was arguing that these machines, they prolong the life of an organ outside of the body. They don't keep it alive forever, obviously, but they prolong the time that you have for the organ outside of the body. So the short seller was arguing that because of the prolonged life of the organ due to the machine, they weren't. The focus was shifting towards not really what is best for the patient, so get the organ into the patient's body as fast as possible, but more creating like this comfortable lifestyle for the surgeons. And their argument was that this is not the right way of thinking when you're doing an organ transplant. But in my opinion, the first thing I thought was, okay, so if we can avoid surgeons needing to wake up at 2 a.m., a team gathering and all hurry just because the organ is out there for 3 hours already, I think you can argue for a case where you can say that it's actually better, because then we have like scheduled surgeons, scheduled operations, and surgeons are fresh and everyone is prepared. And so there are some of the arguments in that short report that have maybe even like a vice versa effect on the other end of it.
You know, there are definitely things in there that, if they are true, they are highly disturbing, but they paint this narrative that it's basically like a mafia company. And after reading it, I was like, if you were to build a company and do fraudulent things and make money from other people's backs, wouldn't you choose some industry that isn't so highly regulated? I mean, just to get approval for a single machine, it can take decades. And I mean, the FDA approved it. That means something to me. And I wasn't convinced. It was like a bad news show, and I think they definitely made some money from it. They were short on the company, and it declined significantly. But I just couldn't believe most of the things that they were saying. And what I do like about TransMedics is they very briefly commented on it, saying whatever they're saying, it's not true. We're doing good. We're focusing on the company, and they just ignored the rest of it. So instead of just letting it drag them down, they just focused on the fundamentals. And I think definitely if they want to,
I think they really had to react on this one because it was so aggressive. So them putting out a statement is actually a good thing, in my opinion, in this case, because normally when you have like a short report, then I don't think management needs to worry about any of that and just execute as normal. But in this specific case, I think the allegations were so serious that I really appreciate them putting a statement out in about this.
Yeah, and it's an industry most people don't really have a grip on or information on, so they needed to say something about it. But let's continue to the business model of this company. It's pretty unique. Can you walk us through what TransMedics actually sells and how they make money from it?
Yeah, so TransMedics' main product, as we already said, are the actual machines where they install the organs onto once an organ leaves the body. That's their product. That's the product that they make, but that's not a product that they sell. And because of the sale of the machine, they make their money. That's not really how it works. It's like a razor blade business model where they rent out the machine basically for free or like a very small sum towards the hospitals. And then every single time that a machine is used, even if they do it themselves or TransMedics picks it up, they need to change the packaging and all the installment devices, and because it's obviously a one-use thing and everything needs to be sterile. So that's how they make the money, by selling those packages after it has been used. And those packages can be very expensive, like tens of thousands of dollars per package, because it's obviously so specialized and so niche. So that's the first part of their business model. And then the second part is where they actually take over the transplantation themselves. So that is not only, okay, here you have the machine and here you have a package, you can do it yourself, but that's also, okay, you have a transplantation, a plant. Let me come in there with my specialized team, with my own machine. We'll take up the cost of the packaging. We'll take up the cost of the transportation. We'll take up the cost of even a surgeon if it's needed. And then they basically move from a razor blade system more towards a transplant as a service, where you basically say, okay, we need a transplantation. Here, you do it, and then afterwards you give me the cost that what it was. And that last part is basically what stands out for the company, I would say, because you would think that, oh, okay, there's nothing really unique about having the machine, having the knowledge, and then moving from A to B, but it's that they have their own planes, their own pilots, their own surgeons. They have an whole software that manages all the planes in the United States, like where are they now, where do they need to go, and that is the really interesting part about the business, and that's the main two ways of how they make money.
They call this the National OCS Program, short for NOP. I think this is the real innovation.
Yep.
It's basically, think of it as a full service subscription, but for organ transplant end to end. You basically just outsource the need for transplants to TransMedics. And I didn't even know such a thing existed, and it's very unique. No one else does this. They are vertically integrated. They have their own aircrafts, specialized airplanes. They currently mostly operate in the United States, but they're expanding internationally into Europe, for example. They have a 24/7 command center, specialized tech built by MIT. They have full-time employees, about 100, that just regulate this in the command center. So it's like a bundle. And I keep going back to my favorite word of this entire deep dive: transplant as a service. It's such a good way to explain this company, because the devices themselves, obviously, they're very high tech. I probably couldn't build one myself, but it's just a product, right? And if you have enough money and R&D and you have the time, someone else can probably eventually build something similar. But definitely this vertical integration program is very unique. And just to give you an idea of what they give this machine, it's a very expensive machine. They basically give it for free, but the disposable sets they use are about $70,000 a piece.
Yep.
And they're not reusable. So, I mean, insane.
I mean, it makes sense. I mean, the number sounds crazy, but if you think about what's needed to get FDA approved and sterile packaging like that, I can imagine that it's very complex and it can really run up the cost. So, like this is one of those examples where I don't think you need to know exactly like how expensive this normally is and how much margin is exactly on the disposable kits and know about the sector, but it does make sense from someone that's not really knowledgeable about it that it's that expensive, don't you think?
I think just for anyone that doesn't live in this world of transplants and hospitals, things are just expensive, and everything has got to be clean. It's got to be perfect. One mistake and can cost someone's life. So you probably don't want to save on getting cheaper items either. So yeah. What I did find interesting is that livers transplants make up almost 75% of revenue. Then 23% comes from heart transplants and just 3% from lungs. With the majority of revenue, about 90% coming from the United States currently, but they are expanding into Europe, like I said before. Anything to add here on the business model? Anything we missed?
No, I don't think so. I think there's also a lot we can say about the business model towards the future, but we'll cover that later as well.
Let's jump into the competitive advantage of this company. I think we briefly touched on the vertical integration already. Maybe I'll just start off, and if I miss anything, please. I think this company basically has two meaningful competitive advantages. The first one being intangible assets, probably the biggest one. I mean, only FDA-approved, portable, warm perfusion platforms for 3 different organs, and I'm getting into new organs as well. You don't get these FDA approvals very easily. They have many different patents. They have performed thousands of transplants already, most of them highly successful. This alone is very hard to achieve, and just getting FDA approval for class 3 medical devices, for example, can take up to 10 years and millions of dollars. I mean, 3 organs for a single company, I've asked around a couple surgeons, is extraordinary. Like, competitors usually have only a single device, like Organ Ox only has a liver device, Ex Vivo only has a lung device. They just are focused on a single device. So the fact that TransMedics has several and there's more coming is very, very unique. And the data is published. Whatever they do, it's peer reviewed. It shapes clinical guidelines actually. So they are doing things very well there. Then another big mode, which is the economies of scales mode, and I think the NOP network comes into play here. To replicate their program, you would need to buy aircrafts, trained coordinators, a surgical team, logistics software. You need the special relationships. You need clinical protocols. You need approval. You need all kind of things we can't even think of, which is incredibly hard. And their scale plus their data, actually, like they track all kind of things when monitoring these organs and when flying and the best routes and whatever they want to track. Over time, this makes them more efficient, which will result in even more successful transplants, which is basically what it's all about, right? Saving people.
Yeah, and I think the second mode of economies of scale is also about intangible assets, right? Because it's also about like knowledge on how to do this properly.
So obviously, this is a very complex company. When analyzing this company, I had to ask around a lot. My father-in-law actually works at a hospital in the northern part of the Netherlands. So he has a lot of contacts and brought me in contact with people. I asked around. So I talked to this surgeon, and I think it's always good to look at both sides of the competitive advantage. So I called TransMedics. I gave them several different modes, but this is all related basically to their NOP surface. When you look at their devices, actually, this surgeon told me that it's not that unique, actually. You wouldn't think so, because we don't work there. I thought this would be very unique, but hospitals basically develop their own machines. Some work on hypothermia, which is cold, which has advantages over normothermic perfusion, which is body temperature, which is what TransMedics does. But you also have different kind of techniques. So you don't always need a device. You also have normothermic regional perfusion, which is a technique for only like $1,000 to circulate blood through the organs. While it's still inside the donor's body, for example. And I know it's not fancy, but it's cheap and it's...
Yeah, I think there's also a mode in their geographical location a little bit, because that's, I think, also one of the threats at the same time, also the opportunity, obviously the expansion towards Europe, but in general, like a mode being in the US market is that the insurance system there is obviously very different. And like I already said, that everything goes through Medicare, and that is not really, like, they don't seem to really care about the costs of these type of things. Well, I think here in Europe, we're very more stringent on the cost. And obviously, because we're not like one big continent or one big nation, we have cross-border procedures and regulation. So I can imagine that here in Europe, that a device, and especially like the costs of the economies of scale with their own planes and stuff like that is different. But I do think that it is some sort of mode in the United States. And coming back to the machines and the FDA approval and what you're saying with the hospitals making their own device, I didn't really know that even smaller hospitals, even in the Netherlands, make their own devices. I didn't really know that. That's a new thing for me. But I do think like the TransMedics devices, they obviously have FDA approval, which gives basically a stamp of quality. But the question does remain a little bit, I would say, is that's also what you're going towards with your story, is it really needed, right? If you have a shorter distance to cover, is an OCS, so a warmer transplant transportation and needed compared to a cold storage one, and that's also what TransMedics is trying to show It's trying to show to the outer world, like, look, we're very convinced of our own product, of our own OCS, and we want to test it against the global market, the cold storage. However, they've recently, like, I think that's also one of the main reasons why it's down a lot, is because trials of different types of tests also got pushed back, because they're basically saying that competitors are not wanting to compete. And we don't really know the exact reason, obviously, from the competitors. And I think management of TransMedics really likes to put it out there that that's due because they know they have a product that's worse quality than theirs. But I mean, if that's true, then obviously that's really nice to hear. But that's one of the things where I think, like, okay, if this comes out in the future, where we can have an actual, like, good test on cold compared to warm in the current state of the market, so the current devices of TransMedics compared to the current high-tech cold storages, then that mode can expand, I think. Okay, so I think that if these tests actually happen with the current devices of TransMedics and the current devices, cold storage devices of the competitors, and what they're saying is true, and the tests come out positive for TransMedics, then it can actually expand the mode. And I think that's also what they're trying to do now, and we'll cover that as in one of the opportunities as well later on. I will give a little bit more body on what they're trying to do to solve that problem of competitors not wanting to compete. But that's something to look out for.
Yeah, and it's a sensitive industry, right?
Yeah.
At the end of the day, it's about saving someone's life, and I don't see a reason why a hospital wouldn't have 2 or 3 different kinds of options for transplants, where if you can just do it on cold storage because the donor lives nearby, sure. But let's say someone needs a heart transplant and that person lives in Poland, right? Then TransMedics is basically the only one that can do it. So I think there's a world that both or several solutions can live next to each other. Obviously, TransMedics would like to be the only one, but for the hospital, I think they wouldn't mind having different solutions. Looking at the sector and industry, I'll keep this one pretty short because it's pretty complex, but maybe just to give you a rough idea of what's going on and where the opportunities lie here. In the United States alone, approximately 45,000 organ transplants are performed each year, which includes heart, lung, kidney, liver, and other organs. TransMedics only focuses on heart, lung, and liver currently. And collectively, they are roughly 18,000 transplants in the United States alone. In 2025, TransMedics completed over 5,000 United States OCS cases, meaning they touch about 28 to 30% of the relevant transplant volume. And they target about 10,000 NOP transplants per year by 2028. So about 55 to 60% penetration of their current market. I mean, if we just look a little bit beyond that, obviously, I have no idea how big the European or Asian market could be, but I can imagine it must be just as big, if not bigger. So growth is not going to be an issue, I think. I think the market, the TAM for this specific industry will grow for a long time. It's an essential service they provide. And this will not go away anytime soon. The only reason this will disappear is either people will all of a sudden start living a lot healthier, but even then, or we build some kind of artificial lungs and livers that we don't need to do this anymore.
I think to talk about that, I think it's also like tech disruption could also be one of the things where there's like a new device that's even superior to it, right? So that's what I would say. Yes, the organ transplants will continue, and even if we live longer, people would want to live even longer than that, right? So like you would still need organ transplantations even if we're gonna live longer. But it's like you never know what type of technological disruption will take place in the next 20 years in this sector, right? But yeah, that's basically with everything, I would also say. Yeah. Well, the most important man is the CEO. Like he's the heart surgeon himself. He's the one that came up with the problem. He's the one that obviously with a team of research did the research and then eventually invented the problem. He is really the face of the company. Walid Hassanain, his name is again. And he's also the one that's like, he's a very prominent figure, I would say, in his earning calls, in his presentations, in his communication. He is almost like a little bit passive aggressive, I would say. And sometimes it seems like he's a little bit too excited about trying to bring the competitors down, like too passionate almost about his own product. Which can be good and bad. For example, like before they reported the earnings of Q4 2025, like he was at a conference, a healthcare conference of JP Morgan, if I'm not mistaken, and there he was already saying like, I can't wait to show you the results. Like you've seen the flight tracking data, and it's gonna be nice, and you guys will enjoy it. And at the same time, like. He's also like really passionate about like trying to communicate that the competitors are wrong and they are right, which can be good, obviously, like being confident. But sometimes it feels like the CEO could be a little bit too confident in that sense.
Yeah, he reminds me sometimes a little bit of Musk in a way, where he's very ambitious, but he can almost be a little aggressive to competitors and just almost rude, or if you disagree with him, he'll just has his own views and beliefs in a way, which is one of the characteristics you probably need as a visionary, right? I mean, what he's doing is unique, and if you don't believe in the product and service, who will, right?
I mean, he's also a very knowledgeable person on the topic, obviously, having worked in the field himself. So you can take it for granted a little bit, I would say. Like he's at least a credible person to be saying, like, look at our product, it's superior. If this was just a regular businessman coming in from a different company, taking over the CEO just to manage the company, it will be a different story, in my opinion. Then it becomes more of a sales pitch rather than a confident quality pitch.
Yeah, and when looking into management, me personally, like, obviously, I am no expert in this industry. I'm no surgeon. So if I ever were to invest in a company like this, I would need to have trust in the management team and the incentives, right? Like Munger always said, show me the incentive and I'll show you the outcome. This is actually the first red flag in this company. So far, it's been pretty good. I really like the business model. It's visionary, but the incentive scheme and compensation structure is somewhat, it raises a red flag for me personally. The things I like is that his pay is variable, so he doesn't get paid if the company doesn't do well, but the incentives are tied to revenue growth. and EBITDA. And first of all, revenue growth can be bought. It's the easiest number to buy. It basically motivates aggressive acquisitions, like buying the entire airline they just did, and just pushing volume regardless of the underlying cost, right? And EBITDA is basically, it works, but it does ignore depreciation. And since TransMedics is vertically integrated, they are not just a software business, this can definitely hurt them. And the incentives are not hard, and they're also a little bit hard to audit. Like, for example, they have a few non-financial criteria, like new architectural designs completed, whatever that means, right? They don't explain it. So this is my first orange or red flag. And I would have liked to see a per share based financial criteria, like earnings per share growth. So you can't just dilute shareholders and grow revenue, or like a return on capital. How well are you doing? And you don't ignore the cost or what capital is needed to fund that growth. What are your thoughts on this?
No, I completely agree. I don't think there's anything to argue against that. Yeah. A green flag is they have a ton of skin in the game, which is something we look for, right? He owns almost 2% of the company. I would love to see if he bought stock when TransMedics declined, what was it, 30%-ish? Or? He did buy stock in December, if I'm not mistaken.
Yeah.
The CEO himself. But obviously with drops like this, like just for the listeners, I think it's now down 50% from, more than 50% maybe even, from the recent top that it set after the last earnings. Yeah. So that was in February, I think. So it went really fast. So obviously, like, if he's not buying himself at this price, then yeah, that tells you enough. Almost, some investors would say. So you would really love to see that the CEO would buy at this price. Yeah.
Yep.
And as you said, to 2%, it doesn't sound like a lot, but obviously, if you calculate it from how much money that is in absolute value, then I would say that's relatively significant. Yeah,
it's more than I have in my pocket right now. So,
wow.
Both our pockets.
You have big pockets, so that must be massive. Then. Yeah, it's like roughly 70 times or his base salary, something like that. So
yeah,
we always say like we would like the CEO to have like 10 times his annual salary. So 70 times is more than sufficient, I would say. So hopefully, like after like these earnings, we would see some buybacks from insiders. That would really would be really nice.
Yeah, agreed. Yeah, just taking you through the financials real quick. It's hard to follow in audio format, so I'll just keep it very short. But revenue is growing fast from just 7 million in 2017 to over 635 million in the last 12 months. Which is a 70% CAGR. So they are growing rapidly. They are doing something right. Operational expenses have grown about 60% CAGR. So revenue outpacing that, which is good. I would say tracking EBIT margins, operating margins, is probably the most reliable margin to track for this company. It's the best way to evaluate the scalability of this business. Because TransMedics has transitioned into an aviation and logistics network as well, it carries massive fixed costs now, including pilot salaries, aircraft depreciation, a command center. So I think operating margins are a good one to track. Mm-hmm. They currently sit at about 70% operating margins, which is pretty good so far. And historically, TransMedics has diluted shareholders for their employee compensation, but this is pretty standard for early founder startup business, that still grow fast. But it is like stock-based compensation compared to revenue is declining. So that is a good trend.
Yeah. To continue on your point on the margin, I think the underlying is also really tracking like the operating expenses compared to the revenue. Like you said, they've outpaced revenue has outpaced the operational expenses historically, but in most recent earnings, I think this was vice versa. So that's like one of the KPIs that's really important. That's basically the underlying KPI of the margin, right? To dive a little bit more deeper into that, because like you said, it's a real expensive operation that they're running, and if that runs out of control compared to growth, then that's a red flag towards the future.
Yeah, and on debt levels, I think there are, if you had to check any company like in three key areas, it's probably going to be like incentives, debt, because if you don't have debt, it's very hard to go out of business. And historically, TransMedics had more cash than debt, but this was the first time ever that they are now exceeding their cash pile. So this is something to monitor. Because of their leases, they are leasing airplanes and...
I think that there's a big note here though, that because they mentioned that that there's a massive lease increase this quarter or this last 12 months because of their new headquarters that they have. And that is not really a direct debt for the very long term, but it's more of an accounting measure. So it's like 335 million on their balance sheet that's put on as debt because of accounting, but it's not really cash debt. It's like the cash will leave every quarter to pay like the rent because they're leasing their headquarters. So it's a really big note that you have to look at when you're looking at these debt numbers from the last quarters. But obviously, like you don't want to exceed a lot more than that, even if it's an accounting measure is fine, but like real debt, that's obviously a negative. Yeah.
I think that for such a young company is normal, especially for what they're doing, right? But you just don't want this to get out of hand.
Yeah. I think right now, one of the more important ones, which you actually touched upon already, is the margin, because that's the big if story in the market right now, because the margin compressed very significantly this last quarter compared to historic levels. And they're saying that this is due to massive investments that they're doing into Europe, into new trials of new machines. And while the explanation is fine, if you're compressing margins right now because you're investing, you would expect this to correct over time. And that is very crucial because when you're obviously, you want to see an increase of revenue, but if that comes hand in hand with a decrease of margin, that's not really what you want to see. So I think the general margins of the company are the most important KPIs to track over the upcoming quarters. And then in general, what you want to see is their transplants, the number of transplants increasing, and also that compared to the global markets. So you don't want to see that they are losing market share in the general markets, especially because they have set a very ambitious goal of 10,000 transplants in 2028. To me, if you look at the current numbers, it sounds really ambitious, and it's heavily dependent on whether some trials go well, whether the new devices for kidneys are gonna start off well. So I would also keep a great look on that, because that's a very specific KPI that management has communicated themselves as their guidance, and it will show like how eventually in the future in a year time how credible management actually is for the long term.
Talking about kidneys, I think that would be a great segue towards the opportunities. I think the kidneys are probably one of the biggest opportunities. But what sort of opportunities do you see for TransMedics?
Yeah, well, kidneys, that's obviously like a new organ and a whole new market that they can enter. And they have also, like I said, the CEO really likes to hype up their own products, and they're also saying like that the regulators are asking them like, when are you coming with a new kidney device? And they're saying that the new kidney device is going to be very good and it's going to increase the TAMs and stuff like that. So obviously, like, I don't know the ins and outs exactly, but it's a massive market. So kidneys is definitely one of the key opportunities for them. And then they're about, to give a little bit more like body to that, they're about like 20,000 kidney transplants a year in the US alone, versus roughly like 5,000 for livers, which is the biggest market of TransMedics right now, and like 4,600 for hearts. So right now they're saying that they're in the final design for the device, and that they're going to reveal the device, I believe, in a couple weeks' time at a new conference in the US. So yeah, that's the biggest opportunity of them all, I would say, because a big opportunity is also Europe. But as we already discussed a little bit, Europe is a different story. And while the total addressable market can increase significantly, because Europe is probably as big, the market of organ transplant is probably as big as the United States, or maybe a little bit smaller. But due to regulation, cross borders, maybe more stringent on costs, not like the same insurance systems, smaller distances as well, I think that the same business model would not work immediately in Europe. So while it is a massive opportunity, I do think that it needs to be a little bit different. What do you think?
Currently they have certain unit economics, and I think these will change in Europe. Whether they're for worse or for the better, I don't know. I would probably say worse. Yeah, and the danger is if you're looking into TransMedics right now and you're estimating certain margins and stuff, if they decide to go all in on Europe and the margin profile, I don't know, declines, halves, then your entire investment thesis becomes a lot more uncertain. But I think the business model will probably work if they, if you start operating in the European Union, for example, it's a lot easier.
It's just curious. I'm curious how that will work, and also because it's so new and they don't really release a lot of information on how well that they're doing in Europe. They're currently only in Italy, and they're saying that, I believe, Netherlands and Belgium are next, maybe. That they also heard positive sounds from neighboring countries in Italy that would want to install systems there and hubs there. But it's a little bit of a black box, so to say, on how that's gonna go and how that's gonna work. I'm specifically like talking about like the airplanes, obviously, because of the shorter distance. Like, I'm not entirely sure how that will look like.
No, but obviously I can imagine that if you were to move an organ from Italy to the Netherlands, that would be done by airplane. Yeah. But let's say in a perfect world, TransMedics operates in Europe, in the Netherlands, Belgium, Germany. If they, I don't know, work together with Mercedes and instead of,
I mean, they do
airplanes, they have a very fast cars, and I don't know. One can dream, right?
I mean, they do collaborate with Mercedes on buses in Italy. I'm not sure how fast the buses are, but
it would be excellent questions on like an earnings call. Instead of asking for what the earnings per share will be, ask certain logistical questions and stuff.
How much is your Mercedes bus?
Yeah. I know, right?
No, and on top of that, I think one of the opportunities is also their CHOPS model. The CHOPS is their cold storage device that they're releasing. It stands for Controlled Hypothermic Organ Preservation System, and over here it's kind of interesting. The story behind this new product, I would say. It's not FDA approved just yet, but one thing I find really interesting as a shareholder is that the CEO has constantly said like, "Oh, cold storage is outdated. You should not go there. It's really bad. We have warm perfusion devices. They are much more superior." And then next thing you know, oh yeah, we're releasing a cold storage device. So then I'm like, okay, that's a bit weird. The reason that they're doing this is, at least what they're saying, is that obviously it's an extra market. They're saying it won't cannibalize their own business, but it's also because, like I already said previously, like competitors apparently don't want to compete against them in tests. So management is basically saying, okay, then we'll create our own cold storage device, and then we'll basically prove ourselves that our own cold storage device is worse than our warm storage device. I believe that's a little bit how they communicated it, right?
Yeah, it's a bit strange, but I don't know. I
mean, if that really works, if their cold storage, let's say, is even if this cold storage is superior to all the other cold storages that are out there, like something like that, I can imagine that it's a smaller machine, but something like that I can see work a lot better in Europe for shorter distances, for example. Right? So I think there's a lot of opportunities here, but I think there's also threats for these opportunities because it's all in such a regulated sector. You're dependent on trials, you're dependent on successful tests, and it's a little bit the same you get this a lot in pharma, healthcare, and biotech, where you have, like, for example, Novo Nordisk, where they have a new pill. It's all dependent on like how good is the actual device or the actual thing that they're making
compared to others as well.
Actual research. Yeah, exactly. Yeah. And that's hard to say.
And I think your black box description is perfect here. It's so much going on, right? That it's hard to really figure it out. Now, where there's opportunities, there's risks. I think I'll go through the ones I found. The first one being Medicare. Like the systems the United States and Europe operate in on funding and insurance is vastly different. So obviously I could be wrong here, but from what I found is that TransMedics charges up to almost 118K per procedure. But hospitals don't pay this themselves. They pass this directly to Medicare via the Organ Acquisition Cost Center, which currently has no cap. You want to save someone's life, so there's no limit. Obviously, if Medicare gets removed or hospitals have to pay this partially themselves or whatever political decision is being made, this will hurt TransMedics. So TransMedics is heavily reliant on regulation and the political climate. And we all know the current political climate is pretty unstable. So you never know what Trump is going to do. But it is almost a loophole for TransMedics. There is just no cap, so they can just charge whatever they want.
This again is a little bit of a black box as well.
Exactly.
Because obviously, like, we do know what they're charging per transplant roughly, but we don't know whether a cap is going to come. That's the first thing, obviously, and where that cap is going to be. Because it can also be that the regulators are saying, we see that this technology of TransMedics is really the better option. So our cap is going to be above that, just because why would you cap a disruptive technology that's seen to be one of the superior technologies that saves someone's life? I mean, it also seems, I'm just thinking out loud here, it seems almost unethical to cap that.
Fair, yeah.
But I mean, that's again like a black box. Like, if it's gonna come, like, I can't imagine that it's gonna be like very, very low, the cap, obviously, because we're still talking about human lives and stuff like that. So you want the best, but I obviously can imagine, especially with current debt levels in the United States, that it's a significant risk.
It's maybe far-fetched, but it's just something to consider.
I think
it's highly unlikely, but it will probably kill their revenue growth and their margins instantly if this does affect their business or a massive cap gets implemented somehow. A more relatable risk is probably disruption here. Obviously, technology is going through a rapid phase, especially now with AI. This also applies to healthcare and to hospitals. TransMedics historically enjoyed like almost a monopoly-like position in warm perfusion, but it's facing a tsunami of alternatives slowly over time, from NRP, like normothermic regional perfusion, to cold storage, to surgical techniques, maybe in the future, artificial organs, you name it. They still would have to be transplanted, obviously, but disruption goes fast, and if anything happens that will disrupt them, that will definitely hurt. And lastly, like a supply chain failure, TransMedics is very reliant on several suppliers. They have a pretty severe bottleneck. They rely on, for example, Fresenius, and they manufacture the proprietary OCS solutions with vital nutrient fluids that keep the organs alive. So they are dependent on this single source vendor, and obviously there could be other providers as well. So they are dependent on their bottleneck supply chain. This is pretty clear for our listeners, our risks and opportunities. I hope so. It's very complex. If we missed anything, or if you work in this field, definitely email us and tell us whatever you think of the risks and opportunities. Maybe we missed something, or you want to expand on something. Let's head on over to the valuation, our last chapter before we maybe give our thoughts and conclusion on this company.
For sure.
Obviously, this valuation depends on your beliefs in this company. I think if you think this company has a very bright future, that the technology is one of a kind, they can expand into Europe, this company can grow 30% annually for the next decade. No problem, I would say. And if you believe so, you will probably get a 30% IRR over that period. But let's say something happens and Europe is a disaster and margins decline and new competitors arise. It's not hard to think that would be possible. If you assume 10% revenue growth and maybe a 5% margin, if a lot of competitors come up, or maybe cheaper Chinese alternatives, you probably will only get a negative return from at this point. How do you think about valuing a company like this? How would anyone decide to get in or wait for this company? When is it cheap enough? How do you think about valuing TransMedics?
I think valuing TransMedics is, as you say, it's a lot is concentrated on execution, and a lot of execution is related to regulation risks. I hope that makes sense. But I think there's the risk towards execution are a lot of external factors that you can't really control. But so valuing a company like this is thinking about, okay, management is saying this. How realistic is this? What have we seen the last 2 quarters compared to what management said would happen last 2 quarters? To give some sense of credibility. And then it can be very simple. I don't think a company like this needs a very, very complex valuation model, because it's all about, it's an if story. If revenue growth is going to be this, what do I think a realistic margin would be? And then what would I think a realistic multiple would be? And then obviously I think you have to really think about especially the last one, because that's very, very the biggest factor basically in every valuation model, right? I see some people on X that just in their model use like a 35 or 40x exit multiple. That's very, very excessive. So always be very realistic about like where this company is heading. If it's performing very well, like you're saying, like 30% growth, then obviously it earns a higher exit multiple. But are you going to model that the exit multiple in 5 to 10 years is going to be at 40? So modeling a company like this is more like, okay, what do I think is realistic when it comes to these 3 main KPIs? I think it's not really more than that. Just factor in the risks that we've talked about, and then do your own research on how big of a risk this would be to the company if it actually plays out, and then model accordingly, I think.
If I were to buy this company, you would have to believe in management. That would be one of my most important factors for this company. If I did believe in management, I think guidance is probably your best indicator here. If you believe management is ambitious, but so far they have achieved what they said, I think going a little bit below guidance on your valuation models is probably a good way to do it. But it depends on how well they have given guidance before and how much faith you have in this company and its future. But I think that would be the way for me to do it personally, and then just being a little bit more conservative to build in a margin of safety. Give me your ending thoughts on this company, Joep.
Yeah, it's a very complex one. Like, just a disclaimer, maybe we need to put it at the front, but I do own the stock myself. I've owned it before it dropped significantly. So I am down on it, for full disclosure. So my final thoughts are basically it didn't really change in the sense of that this company is very complex and there's a lot of risk to it. It's a high risk, high reward play. And that's not really for everyone, obviously. If you're not really, if you don't accept like drops of minus 20% over or in a short period of time, then this is not the stock for you. It has been down like 50% like 4 times in the last 5 years. So concluding for myself, it has been an insightful deep dive, I think. I learned from you a little bit more about the industry, as you have also talked with surgeons, that it's not as straightforward as I would have thought about the technology and the machines, maybe. So did anything change from my own perspective? I don't think, not significantly to the point that I will make a significant sell decision at this price point. That's obviously a little bit of an anchoring bias that I've bought at a higher price. I have to admit that, obviously. But I do think that also looking at the past, that this stock is it's a high growth stock, and if there's something slowing it down, then it gets punished very hard and very fast. And a high growth stock like this also needs like one quarter or one good news, and then it can go the other way. So for me personally, I think the conclusion is that I've learned a lot, and I've learned a lot more about the risk to the thesis, I think, and they are very real. They are very real, but there are also a lot of risk outside of management's control, even. And you?
There's so much to like about this company: the runway, some of the fundamentals, the mission, the ethical reasoning just for owning such a company. If they do well, they will save a lot of lives.
Yeah,
they are vertically integrated. So yeah, there's a lot to like. But when I talked to this surgeon, he basically just confirmed my hesitation, my doubts. For me, this goes straight into the too hard pile. It's such a niche. It's such a small field with so much of the research coming from surgeons themselves. I had to look up so many words during this deep dive just to understand what I'm reading. So the question is whether I would even want to own this company. And it's just what Charlie Munger always said. If something is too hard, just move on to something else. What could be simpler than that, right? So it goes on the too hard pile for me, but I learned so much. So it's a fun company to follow.
Makes sense.
And I'm curious to see how this company will do in 5-10 years from now. And maybe you should come back and talk about TransMedics then.
It's a long time from now.
You must be a surgeon after 10 years following this company.
With all the knowledge, I could basically do it, I think.
Definitely.
No. Small disclaimer, I don't.
Hey, Joep, before we go, where can people find more about you, but also about the deep dives and the articles you write?
Yeah, well, I'm an investment analyst at Tresor Capital. That's Tresor Capital. While we don't really own companies like this in that mandate, we do write newsletters about other stocks and market environments. And you can find us on tresorcapitalnews.nl or tresorcapital.nl, and then you go to the news website. That's where we write like weekly articles about mostly like family holdings and serial acquirers. These are more our niches. So we have some overlap with the TDI guys as well. So yeah, if you're interested in that, you can find us there. I'm sure that Siem will put a link somewhere in the description, if he is so kind.
Only if you're kind. Yeah. Hey, thank you so much, Joep, for coming on the show again. I'm sure we'll do this many more times. At least I hope so. And we'll see you in the next one.
Yeah, thank you very much.